just in general, private lenders, this is really where we stand out, right? So we offer this flexibility and creativity. We're looking outside the box, right? Where traditional financial institutions have a very, very defined parameters, or often legally are required to follow these parameters to underwrite a deal. Whereas we don't have that. We, of course, still have our underwriting criteria, but we want to apply as much common sense as possible to the transaction. It's really great to have this opportunity in your pocket to be able to use with your clients.
Hey everyone, thanks for tuning into the Canadian Private Lenders Podcast, a show covering the private lending industry, the mortgage broker space, and the Canadian economy. Your hosts are Neil Andrino and Ryan McNeil. Enjoy.
All right, everybody, welcome back. It's episode 65 of the Canadian Private Lenders Podcast. You've got Ryan as a solo host today.
Surprise, surprise, Neil is away again, traveling the world. We'll catch up with Neil on the next episode.
All right, so today, I just wanted to do a quick episode here and go through a pretty neat example here. We're going to be talking about property transfers or non-arm's length transactions here, okay? So before we get into that, obviously there's been some big news, and this may be older news by the time this goes live, but obviously our Prime Minister, JT, has called it quits. He's resigned. Government has been prorogued until late March while the Liberal leadership race takes place. So some pretty significant changes coming in Canada sometime this year. It looks like there'll be an election by later in the spring, likely in May. Then obviously it looks like Pierre Poilievre is going to be tough to beat at this point. It will be interesting to see how this Liberal race goes. There's been some speculation here that Mark Carney could be a potential game changer in this race here. Obviously, there's been some buzz around Chrystia Freeland as well, the former finance minister. They seem to be the two front runners at this point, and that may be clear within the next couple of weeks by the time you're listening to this, but I think it'll be quite interesting, especially if Carney ends up taking it with his experience with the Bank of Canada and the Bank of England. And I think it was a pretty successful run for him at both stops. That could be interesting. That could spark this race a little bit more than it looks like right now, because right now it looks like a runaway for the Conservatives. So I'll be watching that one closely, and we'll keep you posted with our perspective on how that could potentially impact the Canadian mortgage market. So on that note, let's get into it. So, like I said, want to kind of dive into a unique and creative financing solution that we had come up recently. We've done several of these deals. I've done a ton of these deals historically, but I really think this one is hugely beneficial for brokers to know, and also just a better way to service your clients better on these non-arm's length transactions. Okay, so these are typically property transfers, often between family members, but financing them can be very tricky because often the purchase price that's on paper is significantly lower
Than what the actual appraised value is. But we do have a solution here, right? So I'm hoping to kind of walk you guys through that and help you have a better understanding of that by the end of the episode here.
Okay, so first off, let's just define what this is. What is a non-arm's length transaction? So it's basically a property transaction between two related parties, such as family members, and it's often at a discounted price to market value. Okay, so for example, this could be parents selling to children, or simply an estate, someone who's passed away, passing down a property to a family member. Okay. Some of the challenges that are associated with non-arm's length transactions, traditional lenders typically base their financing on the purchase price, or the lower of the purchase price and the appraised value, okay, which may not reflect the true value of a property in this given situation. So this would typically leave a borrower with a significant funding gap, especially if they don't have, if they're self-employed, or if they don't have the income or ratios to qualify traditionally. And even when that appraised value is much higher, that doesn't always matter with traditional institutions. So I'll talk about how on the private side we can help with something like this. And we've done, like I said, we've done several transactions like this, but I'll go through a recent one that we did in Fredericton, New Brunswick. This was a really cool one. So the scenario here, appraised value of this property, $380,000. Okay. But the estate in this situation had agreed to sell to the daughter for $225,000. So significant discount, 30-40% discount on this property. Keystone, basically what we did was we looked at the property. We said 380 is well within the range of comparables in this market. We're happy to lend on that. We're going to lend 65% of the appraised value in this situation. So 65% of 380 is $247,000. Obviously, that is in excess of the amount she needed to purchase the property for $225,000. So this not only covered the purchase price, it also covered her legal fees and even left her some room to cover some minor upgrades that were required on the house where it was a bit dated. Okay, and most importantly here, this allowed the property to change hands and establish new title on the property. Okay, so now the daughter has this property in her name, and she's purchased it. She hasn't had to use much money out of pocket, and now she's in a situation where down the road, once she requalifies, whether that's 6 months, it could be as little as 2-3 months. She can go to the bank or go to another financial institution and say, I'd like to get 80% of the appraised value. And where this is becoming a refinance of this scenario, they're going to base it on there's no purchase transaction happening here. So the value of the appraisal is going to be the value that institution looks at. And she'll be able to take that out and pay the private loan out here. So why does this work, right? So, pretty straightforward, right? We're basing the financing on the appraised value rather than the purchase price, which gives the borrower much more flexibility. And this solution ensures the borrower has sufficient funds to complete the transaction and address any immediate needs here as well. Okay. So really what this comes down to is creativity that we can offer. Okay. So just in general, private lenders, this is really, we've talked about this before, but this is really where we stand out, right? So we offer this flexibility and creativity. We're looking outside the box, right? Where traditional financial institutions have a very, very defined parameters, or often legally are required to follow these parameters to underwrite a deal. Whereas we don't have that. We, of course, still have our underwriting criteria, but we want to apply as much common sense as possible to the transaction. And here, where we were able to go back, of course, and look at that appraised value, and not only just base it on the appraised value, but we were able to confirm that value is real based on comparables in that neighborhood, right? So, if this was in, a super rural area where, there's no near comparables there, we're probably not going to lend 100% of the appraised value, but if there is some comparables or we can rely somewhat on it, maybe we'll split the difference between the appraised value and the purchase price, right? And still give that client some potential upside to that purchase price that they've negotiated with their family or an estate. Okay. So, and this is of course very important in private lending, right? We want to be offering these solutions, but we want to also educate our broker partners on how to use these solutions, right? Because there could be many situations where this comes up and you say, well, sorry, the bank's just going to look at the purchase price or the lower of the two, so there's no solution for you. But it's really great to have this opportunity in your pocket to be able to use with your clients and help set yourself apart with this solution. Okay. So just to kind of expand on that. So why does this matter for mortgage brokers, right? Several benefits here. Obviously, I just mentioned it. Enhance value for your client. You're offering solutions where traditional lenders potentially can fall short. You're going to close more deals. You're going to ensure these transactions between family members can move forward without those financial hurdles. And you're likely going to have stronger client relationships as a result, right? Because you're going to be seen as someone who can provide and find resources for unique and challenging financing situations. So very important. And we've seen it time and time again. That tends to enhance client loyalty with their broker partners as well. So something very important to keep in mind. Okay. Benefits for the borrower themselves. So obviously you're going to have a seamless property transfer within the family. You're going to reduce the stress required in, having to come up with those funds to acquire a property that could have a lot of personal meaning to you, or you could just be simply an opportunity to, fix up a property and flip it for potential profit. And as mentioned, you can access to funds for potential upgrades and other immediate needs if there's some upside versus that purchase price. And as mentioned before, maybe the most important piece from a private lender perspective is that there's a clear path to being able to refinance with traditional lenders once the transaction is complete and the title is changed. Okay. So from our perspective, speaking specifically with Keystone Capital and my history in private lending, this allows us to, enhance our broker partnerships and become a trusted broker a trusted partner for our broker partners who need those creative financing solutions. And, just in a nutshell here, just to kind of summarize here, this type of solution is one of the reasons I absolutely love being a private lender. So there's likely no other lender that can offer this solutions, and truly all parties, borrower, broker, and lender really do win in this scenario. Okay. We've applied similar situations, between siblings, whether it's, a parent and child, a grandparent and child, and even in a divorce settlement as well, or with to settle a separation agreement. This can be a great solution as well, right? Where you have that discounted purchase price relative to the appraised value, and you use that private lender as a bridge to use that full appraised value and get enough leverage to complete the transactions. Okay. Obviously, home ownership transfers within family members can be very stressful, and this really offers a solution to alleviate that. So again, one of the big reasons that I'm, I love doing this job and creating and finding these solutions. So just to wrap here, pretty short episode, but some of the key takeaways here, of course, these non-arm's length transactions present unique challenges, but private lenders like Keystone can provide solutions by focusing on that appraised value. And this flexibility benefits both broker and borrowers and facilitates smoother transactions and long-term success. Okay. So if you're a broker listening to this and you want to navigate this, please do reach out. More than happy to kind of walk you through this type of scenario, even if you think it's potential reach in terms of the location or the scenario. We do want to find those scenarios, right? And let us know. Give us feedback too. Like this is kind of a different road in terms of our typical podcast episode, and we've done a couple deal overviews and examples here. But we're happy to continue doing this and kind of providing more insight on different areas that where private lenders help out. But please do give us feedback. Reach out to Neil or I, and let us know what you want to hear in the future. Okay. So again, thanks for tuning in today. Just before I wrap up, we're into 2025 now, and we're really going to have some focus outside. Of course, we're Atlantic based, but we're going to start focusing on private lending in other areas of Canada as well. So we've got some very exciting guests coming up within the next couple of weeks with some pretty major Ontario private lenders. So please tune in for that as well. And appreciate everybody listening, and we'll catch you next time. Thanks.
Thanks for listening, guys. It's Neil, your co-host and co-founder at Keystone Mortgage Investment Corp. and Director of Investor Relations. I'm also a real estate agent, real estate investor, and business owner.
And your co-host and co-founder of Keystone Mortgage Investment Corporation, Ryan McNeil. Keystone MIC is licensed under the Mortgage Regulations Act of Nova Scotia, license number 3000844, and through FCMB, license 89280. Keep in mind, the views of this podcast are for informational purposes only and are not financial advice.